Hey everyone, RJ here. I've been investing full time for a very long time. However, I am not a financial advisor. This video is for educational and entertainment purposes only. Please do your own research before making any financial decisions. Is Microsoft gearing up for a comeback? It's been a bit of a bumpy ride lately. We've seen a 7.5% dip in their stock since late June, which has some people nervous. But let me tell you why that drop isn't as bad as it seems, and why, if you're thinking long term, this could actually be a solid opportunity to jump in. Now, as a Microsoft investor myself, I'm excited about where this company's heading. Have you ever seen a giant company that already dominates start laying the groundwork for the next big thing? I'm talking about AI. Microsoft is doing just that, and it's happening through its cloud business, Azure, which is increasingly driven by AI services. They're investing heavily, and even though their last results didn't blow the market away like some were expecting, the results were still strong. We're talking about a revenue of 64.7 billion, which grew by 16% on a constant currency basis. Now let's start with what Microsoft is really betting on for its future: the cloud and AI. Now, you've probably heard about Microsoft Azure before, right? It's the big name in cloud computing. And it's not just sitting still. Azure is growing at a 29% a year, which is impressive, but it's also starting to feel some pressure on margins. Basically, the cost of keeping that growth going is starting to add up, especially when we're talking about AI infrastructure. But even with that margin squeeze, Azure's growth is something you can't ignore. Now, AI is becoming an increasingly large part of that growth. In fact, AI services are contributing to about 8% of Azure's growth now. That's a big deal. You've got things like Microsoft 365 Copilot and GitHub Copilot, which are AI tools that are seeing a huge demand, and Microsoft is capitalizing on that. But here's where it gets real interesting. Microsoft's gross margins dropped to around 70%, a bit lower than they'd like, mainly because of those rising costs. You might think that sounds like a red flag, but the company's strategic investments in AI and cloud computing are a long-term play. They're laying the groundwork now to dominate those markets for years to come. It's all about riding out the short term pain for long term gain. And if you're a patient investor, this is the kind of thing that could pay off big time. Now, one of the most exciting things going on right now is Microsoft's partnership with Palantir. If you don't know much about Palantir, I've made a lot of videos about them, but just so you know, they're heavily involved in analytics, particularly in the government sector. This partnership means that Microsoft's AI models, like their famous GPT-4, are going to be deployed in highly secure environments through Palantir's platform, like Foundry and Gotham. Why does this matter? Well, national security is a massive market, and Microsoft's playing a key role in it. By teaming up with Palantir, they're ensuring that they have a foothold in government contracts that aren't just lucrative, they're vital. And we're not just talking about today. This partnership sets them up to grab more of that market share in the future. The growth potential here is huge, especially as AI continues to integrate more into government operations. Now, there's one thing I want to talk about, and that's the timing, because all months are not created equal when it comes to Microsoft. If you look at seasonality trends over the past 37 years, certain months stand out: January, March, October, and December. Those months historically have given investors the most bang for their buck, with a 68% chance or higher chance of positive return. Well, right now we're in September, which isn't terrible, but it's not one of those top tier months. Historically, September has a moderate 56% probability of positive return, so it's a bit of a mixed bag. But looking ahead to October, that's where things start to heat up for me. October has one of the highest probabilities for a positive return, so if you're on the fence about jumping into Microsoft, it could be worth watching how the stock moves through this month. Microsoft's seasonality trends suggest that if you're looking to buy, there's a good chance you'll see some gains as we head into the end of the year. Now let me dig into AI just a little bit more, because it's really what's driving a lot of Microsoft's growth right now. We're talking about serious investments in AI, not just in terms of fancy models like GPT-4, but across the board. Azure's OpenAI service is pulling in over 60,000 customers, and the demand for AI-driven solutions is getting massive. Major companies across industries are using Microsoft's AI tools. This isn't just riding a trend, they are leading in it. One of the standout AI tools, like I mentioned, is Copilot, integrated into Microsoft's 365 and GitHub. It's changing the game. In just the last quarter, the number of daily users for Microsoft 365 Copilot doubled. Customers with more than 10,000 seats have more than doubled too. Copilot isn't just some niche product, it's becoming crucial for businesses globally. GitHub Copilot is also seeing explosive growth with over 77,000 organizations using it, up 180% from last year. This is the kind of growth that makes me bullish on Microsoft's AI investment. Another thing that doesn't get much attention, it's Microsoft's role in the security space. They've got over 1.2 million customers using their security solutions, and Defender for Cloud alone is ranking in 1 billion in revenue. That's big, especially when you consider how vital security is becoming in this digital-first world. Integrating AI into their security offerings too, with tools like Copilot for security. Basically, Microsoft's covering all its bases. They've got the cloud, AI, and now they're building out the security in a way that makes them indispensable to companies and governments alike. And they're not just dipping their toes into these markets, they're going all in, and it's showing in the numbers. Now, here's something you should be aware of. Microsoft's facing some real financial pressures. Their capital expenditures hit $19 billion in the last quarter, mostly for cloud and AI investments. That's a huge outlay, and they're expecting to spend even more in 2025. With that kind of a spending, there's always the risk that the growth won't meet the expectation, and that would put even more strain on their margins. Their gross margins has already dipped a bit, down 69.6%, and Azure's margins dropped to 69%. But these are investments that could pay off massively in the long run. They're building infrastructure and capabilities that will let them dominate the cloud and AI markets for years to come. So why am I bullish? At the end of the day, I'm bullish on Microsoft, yes. There are challenges with rising costs and margin pressures, but when you look at what they're doing in AI, cloud, and security, it's clear that they're positioning themselves to be a leader in all the right areas. The stock might be down now, but that just means there's more room for upside. Microsoft is playing the long game, and as far as I can see, they're doing everything right. That's it, guys. If you liked the video, please hit the like button and don't forget to subscribe.